Greetings and welcome to the ROI Clear podcast. My name is Ray Hightower, and today we are fortunate to have as our guest Mr. Charlie Hardage. Charlie Hardage is a real estate investor, and as an investor, he is helping other investors to earn double-digit returns through real estate. He is also the host of the Passive Investors Playbook podcast. So please join me in welcoming Mr. Charlie Hardage. Welcome, Charlie.
Ray, thank you so much for having me. I'm very honored to be on the show.
Thank you. Well, we're honored to have you here. So let's jump right into our discussion. Just to kick things off, we're going to ask you to give us an elevator pitch. And for those who are new to the ROI Clear podcast, Charlie is on an elevator with someone he wants to influence. Charlie, what would you say to that person in the course of an elevator ride?
Usually what I'll do, Ray, is I'll say, what do you do for work? And they'll say whatever they do. And then because they're nice, they ask me, what do you do for work? And I'll respond with, I help people generate double-digit returns through cash flowing real estate, if I can talk properly. And so, a lot of people will say, well, what does that mean? And then I kind of get into my spiel, and then you have some people that don't really care. And they're like, oh, okay, that's weird.
Right.
But yeah, it's only about 12 words or so and pretty simple.
I would imagine that that's a very great way for you to sift, the people you're talking to. The people who are not interested, you don't want to spend a whole lot of time with them, except personally. And, of course, we want to be respectful of other humans and everything. But almost immediately, who would be a good prospect for you in those 12 words or so.
Yeah. Yep. 100% accurate there, Ray. And it's nice because I do have a lot of people that will say, okay, so how do you do that? And because they're curious, right?
Yes.
When someone says double-digit returns, you're thinking, yeah, okay, I've heard that before, but doesn't, it's not real estate. It's not a get rich quick business, or at least what we do. We don't
Yes.
wholesale or flip or anything. But if you do invest and you reinvest and you reinvest, you will get rich over time. You will have a phenomenal retirement and journey. You'll be able to live life on your terms as opposed to someone else's terms or corporation's terms. So, I'm a huge believer that real estate can bring financial and time freedom to people that take action and invest in real estate.
Wonderful. Wonderful. Yeah, financial and time freedom. Tell us a little bit about how you formed that mindset, formed those ideas. I'm sure there's a fascinating story in there. What is your journey to coming to this way of thinking?
I love this question so much because 4 years ago, I would have told you, Ray, I'm smart. Like I can't figure it out. I'm smart. I don't know what to do, but I'm smart. And now, I grew up with the middle-class mindset, work hard, get a good job, put money in 401ks, IRAs, et cetera. And that way, when you're 70, you can have a modest retirement.
Mm-hmm.
Cool. That used to work. I don't think that really works anymore for a lot of reasons. One of those is you don't get a pension, right? Who knows what Social Security is going to be when I'm 70.
Right.
But really I was going to school to get my master's, and I had to do a video interview. It was only 1 minute. They would give me the question on the screen. I'd have 60 seconds to think about it, 60 seconds to respond. And I'm analytical, I'm a planner, I'm strategic. And so that was the last thing I had to do for my application. I spent hours and hours, like, what could it be? What's the question? And so everything through my head. And then as I was about to go to the office to do it, to the office here to do it, I had this just peace and this clarity of what's your biggest weakness. At that moment, I take risks, very, very risk averse, because this is my money. I work really freaking hard for it.
Right.
But at the same time, because I don't take risks, I don't have a lot of big failures. I'm by no means am I perfect whatsoever, but I don't have any big failures, so I'm not able to learn much from that. And that little, 5-minute play in my head was huge for me. And then, of course, the question, which again, it could have been one of probably hundreds or thousands of questions, was, what's your biggest weakness? And which was amazing. And when it started recording, I actually started laughing because I said, I've been thinking about this for a long time and what could it be? And I had so much clarity about this. And so I did 60 seconds. I actually got cut off with the last couple words, but I made grad school and I graduated last year. So everything worked out, but
congratulations.
Thank you. But man, I'll say this, right? Like that was the start of my journey to change my mindset. And then one of my favorite books I've ever read is Can't Hurt Me by David Goggins.
Oh, yes.
Man,
yes.
That is all about mindset. And I to be honest, I'm not a big reader. I like to listen to audiobooks and podcasts. But when I actually read that book, I was, man, it was amazing. What he went through and quick summary of the book, he's a Navy SEAL. He went through SEAL training 3 times within, I think, a year. No one's done that. The first 2, he was injured and so had to restart from day 1. And man, what he went through from being extremely overweight to an ultra marathon athlete now,
right?
Insane. So anyway, that, and I've read other books on mindset as well, but that one by far is amazing. And it didn't happen overnight, but it was all about education for me. Not necessarily school, but education and learning and getting better every single day.
Yes. So your journey, really what it came down to was, I would say, an instance of self-awareness where you said, Charlie Hardage, I don't take a sufficient level of risk. So that was one.
Yeah, I said that in 5 minutes. You said it in 5 seconds. So thank
you. No, I'm trying to unpack because I'm building a framework of what you're saying because I want to listen intently. So that, and then you reading Can't Hurt Me by David Goggins. Oh, a remarkable book. Oh my goodness, that's the kind of book you got to make sure you read it all the way through, because if you just read the first third of it, you can be really depressed.
Yeah.
I mean,
oh gosh. Yeah.
Yeah, but you got to read through to where he perseveres and makes it. As you said, he was morbidly overweight and had gone through an incredibly tough childhood and all of that, but persevered. And Navy SEAL, and he also did the Army Rangers, and he did the whatever the Air Force Special Forces is. I forget what they are right now. So yeah, that's so inspiring. He, in some ways, he's a nutcase, though, isn't he?
Oh yeah. He pushed his body through so like broken bones and stuff like that. I'm like, I stubbed my toe and I'm down for a week, Yeah. But no, I mean, he just talked about hardening his mindset, and I still have something from a year ago that I look at every day when I walk out.
Yes.
It says, don't let anyone get the advantage over you. And what he was talking about is how he was basically talking about the SEAL instructors, how they would give him crap because they knew he was a beast.
Yes.
So instead of him being like, oh, fine, he would do stuff like kind of cheer and like motivate his entire team. And I'm like, dude, you're going through this suck right now, and you are the biggest, baddest dude out there. And these instructors were extremely frustrated because he was outshining them. And so I love that quote, and that might not be an actual quote, but that's the summary. And I read that all the time. Don't let anyone get the advantage over you.
Oh yeah. That is a remarkably powerful book for those reasons. That what a mindset. And you read that quote on the way out the door every morning when you're leaving home.
Well, no, I work from home. It's in my office, and so I have a whiteboard right there. There's a few other kind of notes, but that's from David Goggins, and man, that's just I probably could have bought 100 whiteboards, turned my room into just a whiteboard.
Yes.
And written so many quotes that he had. But that is one of the many that I was just like, okay, I got this, David. Thank you.
Yes. Yeah. Very true. Yeah. I love reading his work and watching his videos and listening to him whenever he's interviewed on a podcast. That's excellent.
Yeah.
So what got you started in real estate investing? We've talked about your mindset, how you reshaped your mind. Isn't that remarkable how humans, we can make a decision and reprogram our own minds? And that's what you did. Yeah. So when did you shift into real estate investing?
Yeah, I mean, Ray, I can't change you, right? But I can change myself. right? And so instead of worrying about other people, worry about yourself first. And you know, in an airplane, if something happens, the mask goes down, you put it on yourself first, not your family, not your kids, because then you're okay. Then you can help other people. But I digress. You know, I really, when I was like 10 or 11, I had my best friend's dad actually owned his own business. And I grew up middle class mindset. Everyone I knew that was working, you know, 40 plus hours a week. This is way before remote work was a thing. And people were working in the office and traveling a lot, and my dad included. And so my buddy's dad was always around. And so, you know, years later, I found out he had a business owner, or he had multiple business and was a business owner.
Wow.
But that really, you know, at a very young age, I was like, okay, maybe there's something else out there. But I didn't really look into that. I kept on the middle class path of, you know, education, and nothing's wrong with an education, by the way. And 401ks, IRAs, that was my path to financial freedom at the time. I was deployed. I joined the military. I was deployed, and on my second deployment, I read Rich Dad Poor Dad. Super awesome book, just like Can't Hurt Me. But that started this mindset of, okay, look into real estate, right? Like look at it, and because that's what wealthy do. Excuse me. And so when I got back from deployment, I found Bigger Pockets and just listened to their podcast, forums, learned everything I could about real estate. But I wasn't I was focused on everything, which means I wasn't focused on anything. Right? And so I was like, oh, I could do that. I could do that. Oh, that's a cool asset class. So I was like a squirrel, right? Or a dog when they see a squirrel. And so, you know, really, and I had heard about multifamily syndication when I was in the military, had zero money, had zero experience, zero knowledge about it. I honestly thought it was a scam at first. After about 5 years of being like, okay, I'm better than what I'm doing now. There's a better future, a better plan. What is it? I started educating myself on more real estate types, and finally started slowly fine tuning my focus. Learn more about the syndication space. I was like, hold on, I can passively invest with experts? No, hold on. And through, you know, I invested with some people that had $3 billion of assets and over 100 deals that they had done. And so going back to, I don't take risks, and there's got to be something else, and I'm not an expert. I think those three paths, that triangle, if you will, led me to multifamily syndication, being able to passively invest. And man, when I got home from the bank after the wire, and I was like, oh my gosh, I'm so nervous. I just sent $50,000 over. But I truly felt at that moment, Ray, that my financial freedom clock started ticking down, right? And it wasn't when I was 70. I'm like, okay, let's see, you know, maybe 5 years, maybe 7 years. And my goal was 5 years, quit my job. I invested in another deal 3 weeks later with the same team. I was like, okay, maybe it's not 5 years, maybe it's 4 years. I was like, you know what? This impacted me so much, right? That this being able to passively invest, and I'm not spinning my wheels anymore like I had been for 35 years. And so I started learning more, started going to webinars. I knew I wasn't going to invest, but I wanted to see what other people were doing, how they were underwriting. And I'm like, you know what? I can do this too. And so I educated myself, joined a mentorship group, did deep dives into underwriting and all that. And man, I started telling friends and family. And to this day, Ray, I have a really good friend. I've known her for about 8 years. To this day, she invested in my first syndication as a general partner about 2 years ago. And to this day, she'll call me or text me almost monthly, like, thank you so much. You changed our lives. And I'm like, dude, like that was the impact that it had on me. And the fact that I can help other people who she's an immigrant. No one taught her this. I'm like, look, no one's taught me that. Right? Like, we don't learn that in school. But now she feels like she can provide for her family, her husband, and her can provide for their 2 kids. And man, I was just like, this is what it's about. We help communities, we help people, you know, achieve financial freedom and ultimately allow them to do what they want when they want. I love it.
That, I can see that radiates on your face, that
Yeah.
joy. First, there's the joy of the freedom discovering that you went into the by the way, before I say anything, thank you for your military service. That's a big deal.
It's a,
Which branch of the military were you in?
I was in the Army. I wasn't
Thank you.
in anything fancy, just Army. No Ranger school or nothing like that. But
Dude, you know what? Thank you, because the way I look at the military, you and your colleagues, you provide a shield behind which the rest of us can do business.
thank
So
you.
that's a very big deal. So thank you for that.
Yeah, thanks for saying that. I love that. Thank you.
Yeah, that's the way I look at it. So grateful to you for that. So while you were in the military, you read Rich Dad Poor Dad, the purple pill right there, boom, and then you combine that with Can't Hurt Me by Goggins, and yeah, all right. So your mindset's there. Did your first passive investment for 50 grand, wired the money. Oh wow, what did I do? But then invested with that group again, and then moved to the other side of the table where you were providing that opportunity for others.
Yeah, yeah, and man, I think that that impact that I had when I first passively invested, and then invested a few weeks later, I truly just was at this peace, and I felt, I've been interested in real estate. I've been interested in my own business, whatever business that was, since I was 10 or 11.
Yes.
I've been interested in real estate for, I think at the time it was like 7 years. Didn't know what. And when man, I just had such an impact on me. And I say that all the time on my podcast when I'm talking to guests, but it's so true, man. And then being able to now, and I don't want to say it's egotistical. I personally don't think so. I love being able to help the residents and build communities. We're not slumlords. We don't make money. We don't jack rents up. We provide value to the residents,
right?
And provide a safe place to live. And then we help investors achieve something that would never be possible if syndications were not a thing. If they did not exist, most of those people, probably Ray, myself included, would be stressed out, would be frustrated, because we know there's something better, but we don't know how to get there.
Right. Syndications opens the syndication model opens that door for you. So there you go.
Yeah.
What markets do you operate in? I know you're in Nashville. One of them is Nashville, but what markets do you operate in?
Yeah, so I'm based in Nashville. I underwrite in Nashville and a couple other markets locally, but we're not in those markets like Louisville and Huntsville. I'm a GP in a deal in San Antonio, and then one in Augusta, Georgia. I'm not, we're going to be in another one. Got asked to join a team yesterday. I'm not going to talk about that. Don't want to solicit that at all.
Yes.
It's 506B.
Okay.
Which means we can't publicly advertise, for those of you that don't know. So that'll be our 6 apartment complex. That's in Oklahoma, and then as a limited partner, as a passive investor, one in Birmingham, Alabama, and then one in Houston. So we try to stay in the Southeast, maybe not Mississippi, but most of the Southeast. There's other markets that we would expand to outside of the Southeast, but we only would partner with very experienced operators that know that market extremely well.
Right.
We just look for where the population is going and growing, and jobs are going. We want to make sure that people are always building, but we don't want to make sure that it's oversaturated and all that. So we look to invest where people are moving to, and in landlord and business friendly states and cities.
Sure. So you're looking for places where the population is growing and where there's opportunity, but you don't want to go into an oversaturated area. It's kind of a balancing act that you're performing there.
Yep, exactly.
Right. And based in Nashville, you said you're also in Huntsville. You're in Alabama, Huntsville, Alabama, other places in Alabama as well, in Oklahoma, it sounds like. Okay, great. Southeast, Midwest, that's your primary market right there.
Yeah, I actually do think Midwest, Indianapolis, Kansas City, Ohio, some parts in Ohio are actually going to be on the next, kind of the next forefront of where into, only because, and in other places too, but because there's, we are facing an affordability gap and maybe crisis in the country with people not being able to afford homes. but Midwest does seem like, in some areas they are growing with jobs, very
Yes,
well-paying jobs, like Intel is moving. I
sure.
think it's Columbus. But big name companies with nice paying jobs are moving, and they're
Hmm.
already a lower cost of living in some of those markets. So
Yeah.
potentially open to that, but again, I don't know too much about that. I'm personally not underwriting there yet, but
Hmm.
yeah, lots on the horizon, right?
Yeah. I'm sure you're looking at what Blue Oval is doing in Tennessee, the Ford
Jackson.
spinoff. What Blue
Yeah.
Oval is doing, and then Oracle's right there in Nashville with their 8,500 jobs. There's so much.
Yep.
This is an exciting time to be in this business, isn't it?
Man, it is. And even with the high interest rates, I know deal flow has slowed down big time for us, or for me at least, in Nashville.
Hmm.
But I'm so bullish on multifamily because, I mean, think about it. People need a place to live, right? We're
Yep.
already in a housing crisis, or shortage, excuse me.
Hmm.
And that housing shortage this decade is only going to get worse. Fannie Mae did a report a few years ago. It's only going to get worse this
Yeah.
decade. So
Right.
that's government will either have to make massive overhaul, or it's going to take potentially decades for us to kind of catch up with housing. Especially
Sure.
inflation didn't help, because now all those properties are more expensive. So developers are like, man, instead of doing two sites, I'm only going to do one, or instead of doing
Yeah.
one, I'm going to wait a couple years.
Right.
So that, I think, in that report was before COVID and
Hmm.
before inflation. So at the end of this decade, there's going to be a 6.5 million housing unit shortage. I think that's going to be
Mm.
closer to probably 7.5 by the end of this decade because of COVID and inflation.
Yeah. 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 It's got to feel good to be part of the solution for that, right?
Love it. And again, it's not just here's a house, or here's an apartment unit. We're going in there, we're adding value. One of the properties that we have locally, Ray, you drove in there. When I first drove in there, there's foggy windows everywhere, mold and mildew on buildings, trash, broken down cars, because the previous owner, it was a cash cow for them. They were making money.
Yeah.
Why would they change? So
Sure.
we went in, but there's so many kids there playing on a tennis court that probably hadn't been used in the 90s.
Yeah.
And so what we're doing is we've cleaned up the property. Most of the windows are done. There's still a few foggy windows.
Hmm.
We updated or I'm sorry, we're updating very soon the tennis court to be a sports court where it's
Hmm.
safer for the kids.
Yes.
It's not just flat concrete, and so they can play and have fun. We put
Right.
security cameras there
Yep.
because people were illegally dumping stuff. They're not really doing
Hmm.
that anymore. That also saved
Right.
us money. But now
Yeah.
it just looks so much nicer. So families want to move there, as opposed to we have to because there's nothing else.
Yep. It's interesting. Listening to you, I'm reminded of this idea. When my partners and I walk through a property, we have to remind ourselves that when we're there, we're walking into someone's home.
Yeah.
It's
Yep.
not just a cell on an Excel spreadsheet somewhere, or it's represented by a cell on an Excel spreadsheet. But every time we walk over there, we're walking into someone's home, and it's really a joy to see when they take pride in their home, when they start planting flowers around the front door, things like that, or
Yep.
when they're cleaning up and all that, or when we do that. It feels good to take over a property and go in and pick up the trash when it hadn't been picked up in previous years. And as you mentioned, you just acquired an asset where the playground wasn't, or what the kids had turned a tennis court into a playground. But you
Basically,
went in.
yeah.
Yeah, yeah. Kids
Yeah.
are resourceful.
Yeah.
Kids are creative and resourceful.
It's a full-size tennis court, and there was
Yeah.
nothing there. I mean, there was a picnic table inside it, and that's about it. And,
Yes.
and so we're going in there, we're going to paint it, we're going to put a sports court on there, a couple soccer goals, and just allow them to be kids and play and safely play.
Right.
So
Got to do that. Got to do
yeah.
that. Man, Charlie, we're coming towards the end of our time together. I could keep asking you questions. This is good because every question I ask you, you have a rich and vivid anecdote or story or block of information to share with it, and it's a pleasure to listen to you on that. Just wrapping up right now, let me ask you, if someone wants to get in touch with you, how do they reach out to you?
Yeah, best way is the website, hkigllc.com.
Yes.
My calendar's at the bottom. You can schedule some time with me, or you can contact us on there. I'm on LinkedIn. I'm on Facebook. Please reach out. I love. Hopefully, if you're listening, you can tell I love talking about real estate just in general and
Yes.
multifamily syndication. Happy to answer any questions, but best way is our website, right?
Yes, through the website, and we'll make sure we include a link to that down below. And for just in case I'm sure there are, if there are any brokers or sellers on the line here on this podcast listening, what is your buy box? What are you looking for now?
Yeah, great question. We are looking for 80 units and above, typically in Middle Tennessee. That goes to Jackson, and you mentioned Blue Oval. That's where Jackson is, out that way.
Okay.
Not looking in Memphis, looking in Louisville, and also looking in Huntsville and Birmingham. Ideally like a B class or something that's a C plus that we can turn into a B class.
Yes.
Value add is what we're looking for, and that could be renovation, or that could be operations as well. Solid.
That's wonderful to hear. So those of you who are listening, if you happen to own a property that fits within that box, reach out to Charlie Hardage, and he'll have a good conversation with you.
Yeah, absolutely. Thanks,
There we
Ray.
go. Well, Charlie, thank you so much for being with us here today on ROI Clear. It has been a pleasure speaking with you.
Man, thank you so much for having me. It's been a blast. Thank you.